Good morning. It's Friday, October 11th, about 6:30 a.m. Central Time. Ended up at a Luke Combs concert. Guy's playing at a golf course 2 doors away from my house. And then also my brother shows up from Chicago. So it was a fist-pumping night and well-deserved because the precious metals snapped back yesterday after identifying key levels of support and then also economic data releases. So to recap, we had the much-anticipated, much-awaited CPI reading that all the journalists were writing about, had an uptick and threw them for a loop. However, we have been identifying that the Federal Reserve, their focus here is not on the inflation readings because they think that inflation will come down over time. They start adjusting the way that they perceive that economic data, and they say that they're claiming minor victory on it, that the economy is adjusting to this higher inflation reading. We were expecting that we would see a low tick in inflation because we've been tracking all of the different elements of inflation. All your agricultural prices have been higher. Your softs, your coffee, your sugar, your cocoa. Also, all your energy prices have been bouncing a bit higher as well. So those inputs are going to bring that inflation expectations just a bit higher. Now, it was the uptick in unemployment claims at 258,000 versus 231,000 that really gets the Federal Reserve in an awkward type of moment here because they are focused on the deteriorating employment data that's coming out. Now, much of that uptick here probably was that previous hurricane, that Helene. Now we have another hurricane that just came through. So expect to see elevated unemployment claims here for the next week or two, and then a big sell-off in those claims. What did it do? It pushed gold futures off that key level of support. We talked about 26.20. It dipped to 26.1880. I also informed you that you might want to adjust your stop losses just a bit with that highly volatile economic data. Now, where's gold futures overnight? Up about $17 at 26.57. Silver futures bouncing back up at 31.37. Copper futures up 2 at 4.45. And the big thing to note yesterday is that we saw aluminum futures shooting up dramatically and then holding that level overnight up about 2.6%. We got platinum futures up $7 at 9.83. Now, crude oil, the S&P 500, and a few other elements here, Bitcoin, had all sold off just a touch here in the overnight session. If you get to what's coming out here today, you're going to have the core PPI data. I don't see that as a big mover and shaker in these markets. Also, the month over month, not a big mover and shaker either. In the University of Michigan, the consumer sentiment and inflation expectations, it just doesn't have that bang that we've seen in previous months. So I don't anticipate a whole lot rattling these markets. Something I told you yesterday is that once the economic data comes out, you want to shift your focus to the CME's Fed Watch tool. With them leaving rates unchanged, that number had shrank dramatically. So if you look at the CME's Fed Watch tool, 14% chance that they leave rates unchanged, 86% chance that they cut 25 basis points. What we're going to want to watch here over the next Monday, Tuesday reading is all of a sudden the expectations for a 50 basis point interest rate cut start to come back in and that candle start to reappear. Now, getting into some other things here. The big thing over the weekend, and this is why I think that it's important to have a futures trading account if you want to try and capture some of the moves in these commodities in the off hours, is that China is expected to deploy as much as $238 billion in fresh fiscal stimulus to shore up their economy. Remember, their economy has been deteriorating, and there's a checklist of different things that they have to hit in order to really hit all elements of the economy and get it back on track. So the announcement will come from their finance minister, and it's going to provide clues as far as what they're supporting and can they achieve their GDP growth targets. Now, if you look at the gold market technically, we are bouncing back up. And what I look for on these markets here, and you could go back to about August 5th to the 7th on the gold market, you'll see that it bounced off the 50-day moving average, started to move up, made a new all-time high, came back down, went back up again. those are higher lows on the charts. Those are called bull markets, and those are where people take small profits and the market's held by fresh buyers coming in. I told you the ETF support generally doesn't come in until about 30 days after that first interest rate cut. Now, the silver market, that's another one. Remember, silver's a bit more volatile, so you're going to have the average true range about 90 cents on the day. So if you're uncomfortable with a larger contract, that'd be a $4,500 move, you shift focus to the smaller contract. Those smaller contracts here work well as far as adding to positions and also risk management purposes. So our next upside target here on the silver market, $32 I think would be your next critical level of resistance. Above that, $32.50, and above that would be $33.22. So if you got any questions on futures option trading, give me a call at 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.